So I'm here with Dimitri, Nick Ayton again. I've got Obi Ayton here as well. And guys, thanks for being here because we're going to be talking about Chainstarter of all things. I know we've been talking behind the scenes and we thought it'd be a really good idea to get into a little bit about what is the prequel to Crix? What actually got you guys to talking about Crix in the first place? And I think that's Chainstarter. So I just wanted to open up, and I'm not going to direct this to any person in particular, but what is Chainstarter? Let's just start there.
Well, it's an interesting question, Chainstarter, and how did we all get together? Well, the story goes back to how Dimitri and I first met, really, which was at a hackathon. And I was working with a Chinese client at the time who was trying to engineer a multi-platform merchant service, and I was helping them with their blockchain architecture. And we were short of talent, so we decided to sponsor and run a hackathon. Dimitri came along with his fine team, and Dimitri was one of the projects chosen at the end as the most promising. So Dimitri and I just kept in touch a bit, and then we ran into each other a few times. And eventually we decided to do something together. And that was really the genesis of Chainstarter. And that brought us into the world of using this blockchain in the early days of ICOs, which came along to as allegedly the democratization of capital raising, but never turned the full circle. But we met and we decided on the back of various companies we'd spoken to that we could do a better job, and so we formed Chainstarter with the concept of providing a more robust set of solutions around building blockchain technologies, but also helping companies get these things called ICOs away. So that's how it all started, really, Sean.
Well, it's interesting to me because what Chainstarter is, in my mind, and you correct me if I'm wrong, is it's basically a solution that enables an ICO to get from start from idea to launch much more easily and efficiently with less friction along the way. That's my understanding of what Chainstarter does. But can you elaborate more on that and correct me on that point?
Well, in a sense, you're right. If you think about what blockchain delivers as a native technology stack, then it does remove friction, time, cost. It's an efficiency play. It is a way of taking out duplication and removing centralization. So intrinsically, it is an efficient technology. But when we got together, we were looking around and we got involved in some early ICOs, and then we took a view that, wait a minute, all these tokens are going to be considered at one time or another to be a security. So our foray into ICOs didn't last very long, and we decided to engineer our whole ethos, all of our services around a world of digital assets and security tokens. So that launched us on a journey, and Dimitri's search for the solutions, all the accreditation, all the KYC, all the AML wrappers that go around doing that properly. So we started building up the other aspects of Chainstarter, which is a series, if you like, of platforms that do things conventionally and do things well.
Yeah. Yes, when we looked at this ICO market at the time, so we quickly found out that basically a lot of bad things going on. So a lot of projects doing the raises without the proper regulatory cover and without proper checking the identities of the investors, without doing any AML checks on the incoming funds and so on and so forth. So we actually started to build the platform which does these ICOs in a regulated way. So that was our main idea, and so that's how we built the software, which did all the accreditation checks and KYC and AML, and maintains the proper register of all investors. And yeah, we can tell about a few examples how it actually worked.
Yeah, please. Could we get into that? Like, who's used Chainstarter? What were the results? Because in a way, this is what you guys had used to cut your teeth to really get into providing a solution in this industry. And it'd be interesting to understand what sort of traction it's got, and because I'm sure it hasn't been a smooth ride from start to finish. Well, right? We're in crypto here. How is it all done?
The other way of answering that question, Sean, is that the industry in the last, say, 2.5, 3 years that Dimitri and I have been at this, certainly together, the industry's pivoted about 3 or 4 times. So you think you're following a path around ICOs, and of course we know that that was largely driven by the altcoin profit. You know, Bitcoin was booming. There was a feeding frenzy, and everyone was trying to do an ICO. So therefore, in those days, it was people were buying tokens because they were using casino money. It was profit money. And then all of a sudden that stopped. So we went into this weird sort of bear market where, you know, people are still trying to get ICOs away, but it just wasn't happening. Then the regulators started emerging in terms of the SEC and various others put out frameworks to say, look, you must do the basic things. After all, you're asking people for money and in exchange for something. And then it pivoted again as we entered the second half, sort of the latter half of 2018 into 2019, where again we've seen a lot more crypto infrastructure being established, whether it's a primary issuance platform like Chainstarter's original concept, and then some secondary market trading infrastructure. So we've come from a world of virtually no infrastructure, ICOs on a fag packet on the back of a frenzy, on the back of, an explosion of profit driven by the retail crowd. And then we had a series of pivots. So, we have built some infrastructure, but by and large, the majority of companies we help raise is now private capital, and we match make them with investors directly. And the token thing is a secondary process, and in some cases it doesn't happen. They introduce a conventional instrument, raise some money, and then sometimes they say, look, we're going to issue a token, which is effectively a digital share or a digital bond, as a way of assuring the investor that their investment is recorded properly and it's all written in as code. So, we haven't really been on a steady path. It keeps chopping and changing, and Dimitri and his dev team has been adjusting the infrastructure to remain compliant and to offer the services to keep on the right side of regulation, which is not only the right thing to do, but it's been difficult.
Yeah, I can imagine, because like you said, the foundation, the whole market's been changing. So you're having to adapt your solution to what the market needs.
Continually. It's a continual. Yeah, absolutely. Right. And also because we're moving in the world of regulation and security tokens, things like that, then in a certain extent that inhibits us from being able to talk in detail about what we do and how we do things, because they are, after all, financial instruments. And a lot of these platforms out there, which I'm sure we'll talk about, but a lot of these advisors, platforms, rating sites, in some respects here in the FCA territory, you have to be aware of financial promotion rules. So even just a conversation where you're talking about a security token can be deemed to be encouraging someone out there to buy something, and it's regulated. So we just have to be cautious with the conversations about what we do sometimes.
Right, got it.
Yeah, so the example I've been talking about. So once we finished building the first version of the software, we started onboarding the clients, and one of the first clients was a company called Munchie. And this was an app with like a restaurant rating app, and they said that it's built on blockchain, so all these reviews and stuff basically is immutable and nobody can change it, and so on and so forth. So, and it happened that was the first ICO officially shut down by the SEC. So, and the reason was that they actually misled their lawyers and ourselves as well, because actually there was no blockchain implemented inside the app. And so that was actually the pure security token, because they actually used this fundraise for the development. So we actually, because our platform has been built with all the proper attributes from the very beginning, so we've refunded everybody, and that worked like Swiss watch, and so everybody got their money back. So yeah, and we were not mentioned in any SEC documents after that, but But that was a sort of good example, and we started to think about it, and then we actually pivoted. So we actually started to promote the concept of security tokens after that, because we actually understood that every ICO is actually the selling securities.
Right. I mean, it's a very, look, I mean, we're talking about ICOs, and like Nick said, you know, a lot of these were just getting drawn up on the back of a fag packet or on a napkin and then, you know, printing money. And so you actually chose to get into an industry to make that process more structured with Chainstarter. Your first client turned out to be a dodgy ICO. Now, in my opinion, especially back then, 95% of any ICO, I mean, for God's sake, we had Trump coin, you know, 95% of any ICO would be dodgy, but that's not, your responsibility wasn't to be the SEC. It was just to provide a framework to work within, right? You weren't, Chainstarter was never trying to take the role of the SEC in that situation.
Well, sure. Our role in the Munchie case was purely as a technology provider.
Right.
So there was no packaging, there was no marketing, there was none of that going on in background. They had separate firms. I mean, the Munchie team were ex-Google guys, seemed to be quite talented, although, you know, the essence of the SEC report was interesting because they were just naive in terms of business. Whether there was an intent to mislead their lawyers or not, but we think their lawyers were also naive because they had never done one before. And so we were just providing the technology, the smart contract to create the Genesis tokens, and then to issue and distribute the tokens and accept the money. It was stopped within the first 24 hours, and there was only a handful of transactions really. But it did for Dimitri and I demonstrate that this industry was just completely out of control, the Wild West. If you haven't built anything and you're raising money, as Dimitri says, that's deemed as a collective investment, a pooling instrument, and by default, it's you know, it is a security. So, in a sense, early days we walked into the middle of it as a technology provider, and of course, since we have helped our clients with other aspects of their project. From other technology and getting them in front of investors. But in those days, it was purely technology. And it didn't put us off. It made us more determined to try and correct the things that we thought were wrong in the industry. And that's what we've done.
Well, you're still here. How many startups can say they're still here, especially after going through, you know, the ups and downs in an ever-changing market? We're having this discussion right now. Surely that's got to count for something. So what is the technology side of it now? You said you're not just focused on that side, you're also focused on maybe giving some advice or consultancy as well. What is the overall package? If I had a startup and I came to you guys, what benefits could I expect from working with you from a Chainstarter perspective?
Well, so we just do a few whiteboarding sessions where we actually help you to value the company, the idea, and everything else you have as your assets, because many companies, they just don't understand how to value their assets and their company. So they put crazy valuations, and basically investors are not coming. So we help them with the valuation. That's the first thing. Then another thing we help with is structuring the offer for the investors. So whether this is a traditional equity offer, or whether it's a convertible note or a loan note or whatever. So we help to structure, and this structure actually has to be connected to the business model. So we help to actually correct and clarify the business model of the company, of the startup, and connect this business model with the numbers to the valuation and to the structure of the offer. So that's basically what we do. And a part of that, we do events which help the companies to meet the real investors and to be able to talk to them. That's basically it. So speaking about technology, so we have the platform which can be used for collecting the data from the investors, the personal data, verifying their identities, doing KYC, AML, accreditation if needed in the US. And this software is actually becoming part of our exchange platform at the moment.
Got it. Got it. So that makes a lot of sense to me. And what success do you expect to get over the next 12 months in the current market we're in right now? What is the appetite like for your service at the moment?
It's an interesting question, Sean, because we do generate enormous deal flow. A combination of the Chainstarter brand is now recognized as being around for some time. As you said earlier, we have been around a while. We're also trying to put quite a lot of content out there to keep educating the market, and we sponsor and talk at lots of events and shows like a lot of others. But I do think that this area, this next phase called security token offerings, you could argue, is there such a thing as a security token offering, or are we talking about digitizing conventional instruments? Well, the answer is yes, we are talking about that. But the genius of this concept of tokenization, which is what Dimitri and I will take a company through on a whiteboard, is that you can create hybrid instances and hybrid instruments, if you like, where you can define the commercial rules for the particular investor community. Investors are still very cautious. They love blockchain. They see it as a tech stack alongside AI and machine learning and all of the other stuff, IoT, smart cities. They love that stuff. When you mention the word crypto, they are immediately cautious. And they see the logic of security tokens, but their major concern is liquidity. And if I buy these tokens, will I be able to sell them in X months' time? So Dimitri and I have been sort of, if you like, pioneering and being evangelists around the ability, using software code, to create a number of different financial instruments that just change state. So Dimitri mentioned convertible notes. You can issue a convertible note through a private placement. You may get some traction, and then the holder of that convertible note has the option to buy a token, a security token, or a digital asset or share, whatever you want to call it. But that then instrument may be just a pref share, a yield-bearing, interest-bearing share, non-voting share. And then later on, that can change state again, that if you decide to IPO or sell the company, that will flip state again to some equity, which is after all what most investors want. So you end up with a scenario of flexibility for the investor. You give them a yield-bearing instrument, and then you give them a share of the upside for their loyalty. So a lot of our clients want to do continual fundraising from Series A, B, right through to the road to IPO, we call it. So this technology is enormously flexible to allow you to construct, instruments that satisfy that investor community, whether they've got a short-term horizon or whether they're in for the long haul.
Right. Crypto capital markets, Nick, I'm going to quote you here. That's really what this is playing into. It's helping to facilitate that direction.
If you think about it, we have traditional capital markets, and if you think about how that's structured around, a fractional reserve banking system and central banks, whether you think that's right, wrong, or what have you, that's where it is. But essentially, it's a system that discriminates. It's engineered for larger companies. So to do an IPO, you need to be a company of means and history. And there are no capital markets really for the small to medium-sized industries. And this is something that Dimitri sort of has been passionate about, because this is about small private companies, quite often smaller companies. And the crypto capital markets is really geared at giving them a way of, getting access to capital and selling their store of value. Because the traditional capital market is very much skewed to the large institutions and the wealthy people. So it's democratization of capital raising, really. That's what we're talking about.
I mean, this is, to me, and there's some thought leaders out there as well talking about major transfers of wealth that are about to happen. And for me, giving the single mom at home who has very little income but wants to invest, or people with, who are in a lower income earning bracket, the ability to invest, this actually opens that door. Crypto opens that door. And for me, that's very important. What I feel sad about right now in the current state, and I just want to come out here on this video to say, I love crypto. I love it. I think it's important, and I can see how it plays out. But in the market right now, I feel like if you say I'm into crypto or whatever, you've got to duck. You know, it's almost as though you're going to be seen as some kind of dodgy dealer or something like that. Yeah. How are you guys managing that? How are you, because you guys are very bold. Look, you know, I've had the fortune to speak with you a number of times. You're very bold. You believe in what you're doing. You're here doing video content as well, and you're staking your claim. How are you managing the negativity about being in the space right now? It's got to be pretty tough.
Yeah, actually, you have to be careful talking about the single mom at home and other retail stuff, because that's actually, so all the investments, including crypto, and not necessarily crypto, the equity investments or traditional bonds or whatever are risky. So, so if you have small incomes, you have to be very careful and not to put like more than like 10% or whatever of your income to the risk instruments. That's everybody will tell you. So that's one side. Another side is actually there are such things as IRA in the US, and it's same thing in the UK, I believe. I don't remember how it's called. So when you have the individual retirement account, and then you can manage your retirement basically money, and yes, you can invest in different assets, including crypto now. So this is a big thing. How we manage, going back to your question, so how we manage, so there are regulations in terms of how you can deal with the retail with people basically, and currently. So when you talk about investments, so the investors in equity or shares, or maybe even a crypto technically, need to be sort of self-certified or accredited. So they have to understand what they do. And we check this with, it varies from country to country. So sometimes you need to check the accreditation status, such as is in the US. Sometimes it's enough just to ask a few questions, such as, are you going to invest more than 10% of your income? What's your income? Is it above like 100 grand a year, or is it below? So what's your current assets and stuff like that? And we figure out which category investor belongs to. And so if we see something which is not correct in terms of regulation in the country, so we just not allow this person to participate. So there are no such regulations in regard to crypto at the moment. So that's why we do not check actually this sort of things for pure crypto. But what you have to do anyways is the AML.
Right. So checking where the source of funds have come from, etc.
Yeah. And it's actually quite interesting because most of the exchanges, even the reputable ones, like the ones claiming to be regulated or semi-regulated, they actually don't understand what's AML. Because they normally limit your withdrawal, which is completely wrong, because you have to limit the deposit, not withdrawal. So you have to deal with the deposits and with the size of deposits, and you have to challenge if this exceeds certain thresholds.
And I mean, are exchanges like Binance or Bitfinex, which we're going to have a whole separate discussion on, but are they doing this? Are they limiting deposits?
No, nobody. No, Binance. Nobody. Yeah. So the thing is that. Even Kraken or Bitstamp, they only limit withdrawals.
Wow.
Especially.
It's mad when you think about it, isn't it? When you think, the whole basis of financial regulation is twofold. Number one, it's to make sure bad money doesn't mix with good money. And the other thing is to protect the people that are making those investments, the investors. So these exchanges don't often cover the basics.
And let me just rewind back a little bit to talk about STOs versus ICOs. Are we saying that it's better to only ever invest in something that's gone through an STO type setup, or is it safe still to invest in ICOs that have gone through some kind of rigmarole like we're talking about here, some kind of technology stack, some kind of process, is it still safe to invest in ICOs?
Well, so this is a more complex question because the proper ICO, so there were quite a few, if not more than like one or two proper ICOs of all time.
Right.
The proper ICO was Ethereum ICO, when basically the platform is built, the token is already there, so there are users, wallets, and all this stuff, and then you basically do the ICO. So this is a totally different story. And most of the ICOs, they actually are using the money to build something. So they don't have anything ready, and they just get the money and try to build something. Most of them fail because the whole concept doesn't work, because normally you raise money in stages. So you raise like small amount of money to build the prototype, then you show the prototype, then you raise some more to build the production version, then you build the production version, you show the traction, you test the business model, then you raise some more to scale, and so on and so forth. So with ICO model, so you raise like crazy amount of money, having nothing, and it's not going to work. It just doesn't work, the whole model. Because for Ethereum, it was actually, it was not the race to build, but it was rather an exit at the point. So the ICO is designed as an exit, actually, in the beginning. So STOs are completely different. So STOs are traditional security placements. So you want to raise money, so you have something on offer, some security, which can be the loan note or convertible note or share in your company. It has to be properly valued, backed with something, with the existing business, with existing product, IP, what have you. And so this is a traditional stuff. So the only difference, so why the word token is coming into the scene, is in the stage, basically, that we believe that all the securities will be tokenized, will be on blockchain, because blockchain is a ledger, is a global ledger for settlement. Totally. So that's the thing, and that's why we are talking about STOs. These are traditional securities, but we can tokenize them, and we can drive this change in the capital market from the traditional, where basically all the clearing is done by clearing houses, and there are multiple intermediaries, and it's not cost efficient, not transparent, and so on and so forth. So we wanted to move, or at least partially move, to blockchain, where everything is transparent, everything is recorded from the very beginning, so you can trace all the transactions up to the origin block and stuff like that.
With STOs, Dimitri, sorry to interrupt you, but I just have this burning question. With STOs, I mean, you have to be an established business first. You needed to have a registered company for something like 2 years or whatever. There's a lot of boxes you need to tick, right? Before
not necessarily. So you need to have a registered company for sure. Yeah,
right.
That's out of question. But you can try to raise the seed round with STO. Why not? So you're selling yeah, of course, we're selling the shares. But the valuation has to be reasonable. So you explain your idea. So the value of your idea is normally in the startup world varies from a few hundred grand to a couple of millions, basically. So you're setting the right price, and if people believe in your idea and in your team, in your ability to execute and to deliver, they can buy the shares, and this will be proper shares of your company.
Got it. Yeah, no, it's really interesting to me. So if I wanted to start an STO tomorrow, I need to be a registered company. I need to have a real business idea. I'd need to justify the amount of capital that I'm requesting. And that brings me to another question, because, you know, having worked with a lot of startups as well, and a lot of pitch decks and a lot of people looking to raise funds, you know, you have your traditional seed round, you have your round A or round B, etc. Very often when I'm speaking with a startup, they are looking for a ridiculous amount of money to start. You know, are we seeing that same trend here? My gut feeling is yes. But are we seeing this trend where people think that they need a lot more money than they need to actually get these businesses, because let's call them businesses in the STO world, these businesses off the ground? Are we being too greedy in this market?
Yeah, you're absolutely right. So there are a lot of people trying to raise more than they really need. And that's actually Chainstarter's mission, to explain them how much they actually need.
Right. Right.
And actually, there was another trend where, there are quite a lot of projects out there that did an ICO. They didn't manage and hedge their capital. There's a few new clients we're sort of working with, and they've actually built something. They've actually got something fairly good, but they haven't managed their capital and they need to raise more. But that then raises another argument, doesn't it? In terms of, you do an ICO, you raise some capital, you try and build something, then you find out you can't do that, and then you pivot and you build something else. So the argument is would the investor or the token buyer, do they want you to do that? And there's a lot of arguments around some of these enormous raises. Look at EOS, for example, where they were, there's huge amounts of money raised, but now all of a sudden they're starting up all these other businesses, foundations and incubation funds and investment funds. Really, was that really disclosed at the outset when people bought the token to raise the money? Probably not. So, it's still a bit loose and shooting from the hip a bit. It feels a bit wrong to us from time to time.
So how are you? No, that makes a lot of sense. Nick, you've got Crix going on. You guys have Chainstarter going on as well. How are you managing both of these? Because they both seem to be requiring a lot of time and energy and effort to keep the momentum going. How are you finding managing both these businesses at the moment?
Well, it's Dimitri and I, over our experience, we've always had a lot of startups and fintech startups, and we do have a smallish team. Dimitri has a team of developers behind him as well, and if you think about what we're really doing, is we're not working with 50 or 100 projects. We're very focused on a handful of projects. We focus on 3 or 4 key events a year. Obi spends most of his time, as do I, filtering down, trying to identify the gems. So we talk to communities. We're out there on social media. We're out at events. We probably get 5 or 10 projects a day thrown at us, and we try and identify the ones that we feel have their best chance of actually getting to market, and they're solving a real problem. They're nice guys, and we can get them in front of our community. So it may seem as though we're sort of taking over the world, Sean, and we've got lots of things going on, but we are extremely focused. I mean, our second exchange is going through licensing, which is very much a process driven by Grant Thornton and other people helping us. Crix is very much crypto pairs. The tech is built. So that's another differentiator for us, is that, as Dimitri said earlier, we have done a capital raise, but our tech is built. The platform's been live, and we've been repackaging it and adding more functionality to it and changing it to keep within the regulatory frameworks and focus. But we're not building a lot. We're spending a lot of our time integrating our tech to other people like custodians and payment providers and people like that. And we're finding it's that part of the market, the third parties, which is playing catch up to us in a sense. So we have a fair few moving parts to manage, but not as many as you may think.
So you're focusing on the few, not the many. And also something interested me there that you mentioned, you're also looking for people that you like and get on well with. So you're not just selecting any business that is willing to pay you guys money for consultancy and the technology stack you've got, but really you're looking for businesses that you believe in, you like the leadership, and you think it could go somewhere.
Well, it helps, Sean, doesn't it? Because we do a lot of speaking, we're a lot of events, and if you can be an evangelist on behalf of your client because you really buy into what they're trying to do, it helps. It doesn't happen all the time, but we have our favorite projects that we think, goodness me, I wish I'd thought of that, and we love it, and it helps. It helps provide positive energy for the team, and we can help them drive more conversations.
Awesome. I think the last question for me from a Chainstarter perspective is, what needs to happen next for that business to evolve? What is your focus? What are you developing on Chainstarter right now? Does anything need to change right now as it is? Or is it now set in place based on where the market's at today?
I think you'll probably get 2 different answers from Dimitri and I, but I'll give you mine. We are increasingly more focused on infrastructure. So I can see the primary issuance platform part of Chainstarter being, with the AML capability, being part of the secondary market exchanges. So I can see our focus shifting more onto infrastructure. I think we will continue with some advisory and consultancy stuff with Chainstarter. We may be a little bit more picky than we are now. But I do think that we have spent a lot of time educating the investor market. So Chainstarter Ventures is focused at events and investors. So we'll probably spend a bit more time on that to try and make the institutions and the wealthy, the people with capital, comfortable with our world, so they come in. But Chainstarter may end up as a pure consulting business where we help build some blockchains and do a little bit of advisory work around valuation and stuff like packaging projects up.
Excellent. That sounds really promising. And for anyone watching this on LinkedIn, obviously get in touch if you're running events, etc., and you feel like this would be something useful to have as part of your event. I guess, Nick, I know you get thousands of messages a day, but I'm guessing that you guys would be open to supporting events and helping do that education side of things, which is...
Yeah, very much so. Yeah, we're always happy to talk.
No, that's excellent. I'm working with someone on the blockchain side for the maritime industry and for some other areas in blockchain as well. And our view is certainly very much the same, you know, education, and not to make that sound condescending, but training, raising awareness of what you can do with these technologies so that people actually deploy them and get the benefits is highly important. So definitely bite off Nick's arm. Dimitri, I'm guessing is it a similar answer for yourself, or?
Well, so the market has to develop,
right?
Because we are in the very beginning. So it will, of course. So the investors will come to these opportunities, and there will be more liquidity. There will be regulated exchanges and stuff like that. So yeah, but it will take time.
Well, guys, thank you very much for covering everything on the Chainstarter side, gents. I'd really like to get into a topic of discussion, Tether.